Hey everyone, welcome back. Greetings to all my fellow money enthusiasts out there. Hope that dramatic intro got your attention. So here's the situation. The United States has carried out its first military strike against Iran since President Trump announced the initial ceasefire agreement. Naturally, financial markets responded negatively. We even witnessed the South Korean stock exchange take a serious hit and trigger a circuit breaker halt. Now, we all understand how closely South Korean market activity tends to mirror what goes on with XRP in the broader crypto space. So let's break down what actually went down with Iran. Is this the start of something bigger? Are we heading back into full-blown conflict? Or is this more of a back-and-forth exchange that stays contained and never escalates beyond that? I'll share my thoughts and perspective on that. We'll also take a look at where XRP stands price-wise right now and try to map out where it could be headed. Look, I'm a straightforward guy. All I need from you is a big smile to put those positive vibes out into the universe. Smash that like button and let's dive right in. So, XRP is currently trading around $111, sitting about 2% lower on the day. You can see it broke below its support level roughly 3 hours back, and the next key floor to watch would be around that $109 zone. What's interesting is that XRP is actually declining at a slightly steeper rate than both Bitcoin and Ethereum at the moment. Though if we zoom out to the 1-month picture, Ethereum is actually down a much heavier 31%, while XRP has only pulled back around 24%. Bitcoin is sitting down roughly 25%, and Solana has dropped about 33%. We've touched on this pattern before. When markets start shifting in either direction, the top 4 assets tend to kind of gravitate toward each other. The one that's been holding up better suddenly drops a bit harder, and then it bounces back while the others catch up. That's essentially the dynamic playing out right now. Could there be some behind-the-scenes manipulation from a trading firm? Honestly, it wouldn't shock me given everything we've learned about what was happening at FTX in similar situations. Someone could very well be trying to rebalance positions across the top 4 and capitalize on the price discrepancies. It could also simply come down to liquidations. Somebody got a little too aggressive today given the Iran headlines, and it's CPI day on top of that. Happy CPI day to everyone who observes it. CPI numbers drop at 8:30 a.m. Eastern, so we won't be waiting long. Now, if inflation comes in above expectations and the U.S. continues its military operations against Iran, here's what we just saw reported. U.S. strikes have now targeted drinking water infrastructure in southern Iran, cutting off water supply to the entire district. Iran responded with a warning that it would place all Gulf energy infrastructure under continuous missile fire and has specifically flagged water desalination facilities, which the Gulf depends on for over 90% of its supply, as priority targets. President Trump indicated he couldn't remain passive after a U.S. Apache helicopter was shot down, and this strike was his response. It's not a full-scale escalation, more of a signal saying, "Cross us and we will hit back." From what I can see right now, it hasn't spiraled further, but the potential is absolutely there. Here's what I'm watching. If CPI comes in hot and oil prices spike because this conflict reignites, you've got a scenario where inflation stays elevated for longer, and that's the kind of combination that can really unsettle markets. Interestingly, though, oil isn't reacting the way you'd expect. It's still sitting around $88, which tells you the market is currently reading this as a limited, controlled exchange rather than the beginning of something catastrophic. If Trump wanted to go full force, he would have. This feels more like a demonstration of capability, a reminder that they still have the reach. What I also found notable, as those headlines broke, silver dropped from $69 down to $65 and is now at its lowest point since the March sell-off. Gold has pulled back to around $4,200, its weakest level since December if you remove that one massive wick. So precious metals are retreating, which is actually a constructive signal. When gold and silver surge, it typically means investors are fleeing to safe havens out of fear. The fact that they're selling off suggests the market believes a resolution is still possible, and that this won't spiral into something catastrophic. The thinking seems to be, Israel struck Iran, Iran struck back, Israel retaliated, and it still didn't blow up into a full-scale war. The US struck Iran, and it still didn't trigger an all-out conflict. So the probability of Iran coming to the negotiating table and agreeing to some kind of deal is actually rising. That's the narrative markets appear to be pricing in. That said, the crypto fear and greed index has fallen back down to 9, so we're firmly in extreme fear territory heading into CPI and all this geopolitical noise. Look, I genuinely don't know how today plays out. We've talked about whether this is the bottom. Maybe it is. Maybe we haven't seen it yet. What I do know is that pullbacks like today can present opportunities depending on your time horizon. If you're thinking long-term or medium-term and want to position accordingly, our partner BTCC can help you do that. BTCC has been a long-standing partner of this channel and is my preferred leverage trading platform. I've actually met the team in person, which matters a lot to me when it comes to trusting any exchange.